Hi students, I'm Mr. Jason and I believe by now you would have completed the series of the statement of cash flows. Now I'm going to summarize this chapter and I think that it is vital for you to listen to me for the next few minutes because this statement has been tested in a WAIS exam paper every year. So let me move on to the next slide. What I'm going to do today is I'm going to actually summarize how you reconstruct all the ledger accounts required for the specific activities in this statement. And then I'll proceed to talk to you about how we interpret this statement. There are three main activities in this statement: operating, investing, and financing. So I'll focus on the operating activities first. The very first line you should write in this statement is called receipts from customers. And the points below are the points where you should look at in deciding what to put as the amount for this line. To begin with, this is how you can reconstruct the accounts receivable. Don't worry about the figures too much. They are taken from a textbook directly. You just need to look at the pattern of each of the items at the debit and credit side of the account. Note that I've bolded the bank because that is the main thing you should include in the receipts from customers. Sometimes you may be required to open up allowance for doubtful debt just to find the bad debts amount, and this is how it looks like. Besides these two accounts, if you're a service business, you won't be selling anything, you'll be charging fees. So this might be the account that you might want to open to find a bank. Now let's move on to the second line item. It's called the payment to suppliers and employees. And I believe your lecturers have told you in class that this line item is the longest line item. Sometimes the amount of marks allocated for this line item consists from between 16 to 20 marks. And the following are the points that you need to probably consider opening accounts for. Now, for the first thing, you need to actually look at the main supplier of the business, and there are two main accounts that you probably would need to open. So I'll show you the following two accounts. Now, the reason for you opening inventory account is really to find how much you are buying. So the bolded item called accounts payable is basically your purchases that are made on credit. But that is not the main point. It is the second account that you would need to open, which is called accounts payable, because the bank that is bolded is the amount that you would include into the payment to suppliers and employees. Besides the main supplier, you may have other expenses paid. So an example here given is prepaid rent. And sometimes when you have any prepaid expenses, this pattern can be used to decide on the bank amount, which you will also include into this line item. You may also have accrued expenses account that is required to be opened. So I'm giving an example of wages here. So this is an example of how you can open an accrued expense account to find how much you have paid. Again, this amount is to be included in the second line item. Besides those things, interest paid and interest received have to be separate line items because they are a specific disclosure requirement by the accounting standards. So I have shown you how to open the accrued expenses, prepaid expenses, as well as the unearned income account previously, but I will show you how to open an accrued income account if required. So I'm focusing on the accrued interest income. Again, the bolded bank item is the one you should include into the interest received line. Alright, moving on. The other specific disclosure items would be dividend received. Again, I have showed you the accrued income and the unearned income accounts. However, for income tax paid, usually what you can do is you can take last year's income tax payable, but the recent ways examination marking key has stated that we have to open the income tax payable account just to be able to attain the marks allocated for that section. So I'm going to show you the income tax payable account now. Moving on to the second section, the investing activities. Now, this is mainly caused by any purchases or sales of non-current asset. So I'm going to show you 3 different accounts because I'm going to focus on what happens when you sell an asset. There are 2 bank items that you will need to include into the sale of an asset. The first account is the asset account itself. So I'm using the motor vehicle account as an example here. Again, the bank bolded item is the amount you're going to put in as a purchase or a payment for a non-current asset. But the thing is, most questions also include a sale of a non-current asset. So if that happens, you'll probably need to open 2 other accounts. The first account is accumulated depreciation. So the sale of asset item that is bolded is basically something that you would have to include into the next account that I'm showing now. Now the purpose of this sale of asset account is to find bank. So bank is the amount that you would include as a proceed of sale, and this is a part of your investing activities section. The final section of this statement is called the financing activities. So what is included here would be things like loan from bank, repayment of loan, debenture, or repayment for a debenture. You are not needed to open any accounts here. You just need to do a simple mathematical calculation to find out how much you have borrowed, how much you have repaid. Or if there is no changes, you don't have to put anything in. For share capital, sometimes if you have issued shares, you may be required to open a share capital account, but that is quite rare in a statement question. However, for dividends paid, it is almost necessary to open the retained earnings account. So I'm going to show you how to open the retained earnings account in the next slide. Again, the focus here is on dividends. So the amount for the dividends would be included in dividends paid under the financing activities. Now, the last 3 lines of the statement of cash flow is important because it tells you how your cash and cash equivalent has changed over the period. So the cash and cash equivalent at the start of the period would include things like cash in hand, cash at bank, and term deposits which must mature within 3 months. Anything beyond that would not be considered as cash and a cash equivalent. If you do have a bank overdraft, it will be a negative amount, and since this is a statement, you would have to put a bracket in that amount to indicate that it is a negative amount. Again, the last 3 lines would indicate whether your statement is rightly done. So please cross-check before you submit your answer. Now, I believe this is important for you to conduct your activity for the day. So all the best in class. Now that you have done your activity, this is how we should interpret our statement. Firstly, you need to state the change in cash and cash equivalent in sentences. So what you can do is you can say things like how your cash and cash equivalent from the start has increased or decreased compared to the cash and cash equivalent at the end of the period. Step 2, you need to state what happens in each activity. So what is the main point of this step is to actually explain the link between why certain cash inflows or outflows have increased or decreased in each activity. Step 3, you need to examine and explain the change that occurred within each of the operating investing, and financing activities. Let me give you an example. If, say, your operating activity has an increased or it is a positive amount, it is a healthy indicator. But perhaps what you can do is you can look at each line item. For example, if your receipts from customers amount is much higher than your payment to suppliers and employees, then that can be something you would analyze and explain in your answer. Once you've done all that, the final step is to draw an overall conclusion as to whether the company has improved or not in its cash flow. So if the company has improved, then it is a good conclusion. If the company has not improved, then you should make recommendations for future. Alright, that's all for today. All the best.